All right, I am back with Zach Strickland here for another carrier update. We were talking about the reefer outbound tender rejection index, the Anthony outbound tender reject index, and our van outbound tender reject index.
Right, yeah, the reefer van and Anthony index. So, we're in kind of a holding pattern right now in terms of the overall market volatility. We're not changing tender rejection rates. They're not rising. They're not falling dramatically by any means. And it's somewhat anticipated in the month of October. However, it's hard to say anticipated for anything moving forward. And especially as long as rejection rates are above where they are, like 20% and higher, there's always going to be some level of upward pressure on rates. It just depends on how desperately or how accustomed to this level of capacity shippers are. If they really need this freight to move, upward pressure will be easy to apply to those rates, in any market, anywhere in the United States. But right now, if we go ahead and move on into the spot rate chart here, horizontal lines. These are weekly spot rate averages from truckstop.com's top 100 lanes in the United States for each of our three main modes here: reefer, flatbed, and van, all sitting right here. So very slight downward trend on just about every single one of these. And if we go ahead and fast forward into the lanes real quick, just to highlight some of the areas, we're just not seeing a lot of consistency in spot rate activity right now. This is why it's horizontal. You've got some lanes going up, some lanes coming down. The gross majority of these van lanes are on the downswing, just slightly so, however. But look at some of these rates, Cox. I mean, $3.50 a mile all in, Indianapolis to Atlanta. This is astonishing, how elevated all these spot rates are right now compared to historical values.
Yeah, if we split this chart in half, right, we've got 50 lanes on one side, 50 on the other. I only count 7 under $4 on the top 50.
And to your point in the last segment, we were talking about how would you have thought that, rates being over $3 a mile in Thanksgiving, we're going to get higher next year. Yeah. And no, the answer is no, clearly not. So the market still remains very destabilized, and tender rejection rates didn't increase throughout the year. They kind of jumped in March and then came down slowly throughout the year. But again, that upward pressure is maintained when you have those rejection rates higher. Let's go ahead and click on to the next map here with our weighted rejection index just to see, okay, what do we expect this week? Because spot rates tend to be a little bit lagging. Let's see where carriers are rejecting more or less freight significantly week over week with our weighted rejection index, which takes volume into account, as well as that weekly change in tender rejection rate. We talked about Ontario yesterday. That's the only dark red on the map, indicating loosening signals week over week. And we'll dive into that one here in a minute. But then we've got Elizabeth, New Jersey up here in the blue. So we've got this very polarizing, we talk about this seesaw of capacity going back and forth. And really, these two coasts are fighting for all this capacity. You've got a lot of short-haul freight volume consumption activity on the East Coast. It's got a decent amount of inbound pressure, too, right now from some of these port presences. But most of our freight comes into Los Angeles and then traverses, this large space here. And there's just not a lot of people living in this area of the country. So until you get to about right in here, you're really not seeing a lot of consumption activity. And then, of course, that gets denser as you move here. And that's what's happening. You've got a lot of freight moving this direction and not a lot of freight going back that direction. But carriers are trying to get into that space. So whenever we see a loosening signal in Ontario, it's a pretty big deal because that's where most of the freight pressure persists.
Yeah, that's what I was going to say. I mean, I don't know if I've seen this guy red for a few months now. So it is good to see it loosening a little bit. Probably not going to stay that way. Do you have any? You said you might have some insights on that market?
Let's go ahead and pull up the next view here, which is the Ontario and Elizabeth market OTRIs. So you can see when we're talking about a significant easing, tender rejection rates dropping to 16.35% overall. That doesn't mean that every lane is that way, but it was actually kind of at an anomalous peak here just a week ago. So that's why we're seeing that dark red there, is that it jumped up to about 18.5% there for a minute before coming back down. Long haul freight volumes also on the decline, helping to accelerate this downward pressure just a little bit. It's not a lot, very small change there. In Elizabeth, New Jersey, rejection rates up over 22%. It's a little opposite of what you would expect in terms of overall rates, because rates are higher going out of Los Angeles than they are out of Elizabeth for the most part.
Yeah, I remember looking back at I think we're going to have one more carrier update later, but on our rates chart, there was, all of the, other than out of LA, everything else up here is just short haul Northeast rates. But there's still some crazy rates up there, close to $5. All right, great stuff, Zach. We'll be back with you in a minute.